Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me from the market site in Times Square, we have David Cowan. He is the President and CEO of the Museum of American Finance. And today is National Financial Awareness Day. And what better way to celebrate it than learning about the American system of finance. David, it is so great to have you back with us at Nasdaq. We're in 2019, and we're going to go all the way back and to the beginning of our American financial system.
Thanks, Jill. Yes, we are caretaker of our nation's financial heritage as the only finance museum in the nation. We've got some 13,000 record locators. Some have one item, some have 100. We brought a couple of special ones today to teach about the origins. And so many people in America just take the financial system for granted. And even the traders on Wall Street don't quite understand how did this system all occur. We're going to talk a little bit about that today with you. And so we brought some of these items. The first one goes back to the Revolutionary War, 1775 to 1783. And we're under the Continental Congress as a nation then. And they're issuing what are called Continentals. Here's an example. This is the backside of a Continental. And you can see it says death to counterfeit, because the British were counterfeiting our currency like mad to smash it. And these are going to get depreciated because we're losing many battles. And as a result, when they are finally redeemed at 2 cents on the dollar. And a phrase in history, not worth a Continental. So not a great system at that time for our liftoff of financial literacy at the beginning of our nation. If we fast forward a little bit, there was a battle here in New York. George Washington loses that battle in 1776, retreats to White Plains, loses a battle there, is running across New Jersey in November. And what does this Continental Congress decide to do? We're going to have a lottery. And this is Powerball 1776. So lotteries are as old as the hills. What's amazing about this lottery is the Congress in their infinite wisdom isn't going to pay it off in money. We don't have money at that time. It's going to pay it off in bonds. And as a result, this lottery is not going to fare too well. And so lots of the tickets actually still remain. That is not a super rare item. But the point I really want to make in general is the finances were very difficult then, which leads to hyperinflation. It's not just Weimar Germany, where we learn in the textbooks that they have the wheelbarrows worth of money. It happened here in America at this time. So how do you protect yourself? This is a Massachusetts bond from 1780. And what's amazing about this bond, it's not going to necessarily pay off in cash, but it's tied to 5 bushels of corn, X amount of beef, some sheep's wool, and some sole leather. And that is very similar to
Tips.
To tips, exactly. You got it. At Treasury Inflation Protected Security, we're doing it with commodities at this time. So once again, the products might be a little bit different, but the notions are one and the same. And so we had a very difficult economy back then. We had been smashed by the British. How are we going to go about creating our financial system? The war is going to end in 1783, and then our nation will start in 1789 with the Constitution. Let's roll back and take a look at a couple of issues from 1788, so a year before we are a nation. And the first thing to know is that all the debt that's been issued in most cases is trading at junk bond prices. We are a terrible credit. And they're being traded very sporadically. There's no organized exchanges. There's no such thing as Nasdaq. Maybe a broker here, a broker there. And then there is no quasi-central bank, no central regulating monetary authority like we think of. There's only 5 corporations in all of America. We don't even have our own dollar as the system of measurement. We have foreign coins that are being used here, and there's all of 3 banks.
It's so crazy to think of the United States as an emerging market.
Amen.
Right.
And a junk credit at that. So what's going to happen by 1795? Let's look at those same metrics. Let me just pull them up for the audience. And it's incredible. Our public finances were a great credit at this point. We've managed to get ourselves from junk status to getting 6% bonds that are paying interest, a 3% bond, and a deferred system. We have actually markets in several cities, not just here in New York, but in Philadelphia, in Baltimore, in Boston. We've got a central bank at this point that's been created with 5 branches that's going to be able to add liquidity, take liquidity away, and in some cases, believe it or not, act as a lender of last resort. We're up to 40 corporations in America. We've got a convertible US dollar set to gold or silver, and we've got 20 banks. And the point is, who did this? Well, this is Alexander Hamilton.
Yes.
Now, some years ago at the museum, we would talk about Hamilton, and nobody would have any idea who he even was. First Secretary of the Treasury. He's going to come into office for about 6 years, and he's going to instill a financial system that we live under to this day.
Yeah.
So what did he do? So he's got 3 monumental state papers that we want all Americans to know about. The first one we showed on Trader Talk some time ago, about a year and change ago. This is his report on public credit. He took all that debt left over that was trading at junk bond prices, state debt, the nation's debt, and he assumed it. This is very powerful. He said, we're going to pay this off. And it gave us a good credit by doing that. How he did it was by creating that deferred market I mentioned a little while ago, giving investors a haircut, but a creative way to go about it. But we honored our debts. And if you look at the Chinese, they reneged on the communist debt. If you look at the Russians, they repudiated the czar's debt. We're going to honor it. And so he needs to get this through Congress. Have you seen the show at all?
You know what? I have not seen the show, but I have read a few books on him and his wife Elizabeth, who is equally as fascinating. So
Amazing
I encourage
lady.
everyone to actually pick up a book and read. It's a great story.
It is, and so there's a wrap in the show, The Room Where It Happened, which takes place at Jefferson's house, because the Virginians, they hadn't been profligate with their debt. Why are they paying for this Massachusetts debt that I just showed you, or the Continental Congress debt? And they trade the capital to be on the shores of the Potomac in exchange for them agreeing to this first one, the report on public credit, to be passed through Congress, so we assume the debt to give us a good credit. There's 6 words in there that I really love. I mean, Hamilton couldn't hold his ink. There's 16,000 some odd words, and 6 of them are why we should do this. It was the price of liberty. And so we like that. So he gets that through. Then he needs to create a central bank. He gets this through Congress. And by the way, again, highly controversial.
Right.
Implied powers are going to come through that because the Jeffersonians are saying, hey, you don't have the right to create a bank. The Constitution says you can't do it. He says it's living, it's breathing, it has implied powers. We get a central bank that's going to be around for, it's really a quasi-central bank, but for 20 years. It's going to get killed over politics. But mind you, at least we get that in place. And the third piece is the report on a mint, and that's going to create the US dollar. And so that's the basis, America, for how your financial system was started and begins to lift off.
I wonder what they would think if they saw our current state with the Fed and everything. It's really interesting if you could have them time travel and see what it has turned into.
So that's a great thought. I think the only founder that would really understand it is Hamilton. But many of them would be spinning in their graves over the size of the debt that America's issued. You know, the $22 trillion odd dollars that we're sitting
I mean,
at.
is it inflationary? You wouldn't know if you just look at the numbers, right?
Yeah, right. So even Hamilton, who created that debt, said the following thing, because he creates it in that report on public credit. The Treasury bonds that are created there's a direct line to the Treasury bonds of today. It's our national debt. But he said it will be a national blessing if it is not excessive. And of course, most economists, a lot of them say it's getting quite excessive. And so the point is, I think only Hamilton would have understood where we're at today. So if we fast forward a little bit though, now they said, well, you don't know how to run a budget, Hamilton. You know, are you playing games with the money? So he had to put, in 1793, he puts together the 1792 revenues and expenditures of the United States. And we have this amazing document, Jill, and it's for the viewers behind us, but this is the most incredible Excel spreadsheet.
Excel 1.0.
One that you'll ever see. And the revenue at this time is the tariff. Sound familiar?
Yes.
It is the tariff that's coming in, it's being collected at the ports. Mind you, there's a lot of cheating going on. So Hamilton, who's responsible for this, sets up what's called the Revenue Cutter Service, also known as the Coast Guard today, to enforce the laws to pay this tariff. There's also the tax on whiskey that's going to be in here. So this is the revenue side, but I wanted to point out the expense side is really interesting, and we'll fast forward to that, because he's got to account for every penny that we spend. This is George Washington's salary. Now it's $25,000. There's some timing differences why you see $22,500. There's John Adams. He's vice president. He's getting $53,40, $5,340. And then we're going to go through this a little bit. Hamilton is getting, for his little office here, $10,000, twice what John Adams is getting. So you can see where we know the role of the Treasury is so important. Let's take a look at Jefferson, who's Secretary of State. Excuse me. He is only getting $9,000 or $8,000 something. And take a look. He's renting his office. Foggy Bottom, which is what we call the State Department today, doesn't even have a permanent office at this time. And the Pentagon budget, well, here's the war budget under Henry Knox, $9,000. Now, the Army in the field goes into the millions, and the total budget's about $9 million. But the point is the ratio of headquarters to The field is very different today than it is.
Yes, it is. I mean, I wonder if he gave himself such a high salary because the Bank of Exchequer, when they came, where they all came over from England, had such power. I mean, they held the purse strings. I wonder if they were still in that mindset.
It was the biggest area of government because he had all the port collectors reporting to him. And so the State Department only had 5 people. You know, Hamilton initially is up to 55, and if you count all those ports and the lighthouses too, which reported to him, you're over 1,000 in the head count. So it was a very big job at that time, the biggest in government. And so I wanted to fast forward a little. Should we talk a little about today and the financial illiteracy that's happening in this country? It is really, it's an epidemic. The Fed put out this report that 40% of Americans don't have $400 in savings, and very scary. And there's a lot of challenges to free enterprise today. So how do we think about it? How are we going to go about teaching this to America? And so we talk about it in terms of the 3 Ps in the middle here. The 5 Ps, the first one's the problems, but personal finance, public finance, and private finance. So 3 areas. How does this affect Jill as an individual? How does this affect business? How does this affect the government? But the themes going through it, budget, credit, investing, and risk, are the same no matter which party you are in that curve. And so that's how we go about breaking through the mindset that whether you're Jill and you need good credit for a house or for a car, you need good credit if you're a government, which Hamilton gave us, by the way, within a few short years. We're going to borrow substantially most of the money for the Louisiana Purchase to double the size of our country.
And that's why we need to get financial literacy in the classrooms. Only 27 states require it. There's a couple more states to go that need to have this.
And there's no standards. And where we want to also bring this discussion, which we talked about, is we want to teach the prototype. Who set this up? Alexander Hamilton.
Yep.
It's an incredible testimony. It still lives today in many different assets. The Federal Reserve is in many ways the 3rd bank of the United States, that first central bank I referred to. So we want to teach this. We want to thank you again for letting us come out and share some of these wonderful possessions from the museum.
We are always very happy to come and get a little bit of history lesson from you. David, as always, thank you for joining me at MarketSite. And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.